What's good, YouTube? We are back with another video, and today is just a little recap on the trade we took today and just tape reading price action, seeing what happened. So start off with an empty chart, and we're gonna mark out what happened in the series of events that it occurred in. So drop down to this 15-minute chart right here, mark out 9:30, and then we're gonna mark out a very significant fair value gap that price had taken. So there we go. Alright, so prior to 9:30, we were inside of this bullish gap I'm gonna get to. That was the buy side that we're taking. Alright. So right before 9:30, we were in this imbalance. Right there, volume imbalance connected to the wick. Boom. So I had this marked out at 9:30, and this is how my read came about. So the bodies kept filling in, and they stayed above consequent encroachment of this 50% mark, and they were staying towards the upper end. And then obviously 9 o'clock came, boom, bullish close out, which is showing signs of bullishness. And then we had another retrace back at the 50, which was a candle close out, another sign of bullish, whole 15 minutes, but we ended up just still closing out. If we look to the left right before market open, obviously it would be accumulation. If you look at it, just all these wicks meeting each other. So what really gave the read was 9:30 open, look to the left of us. So the 50% mark got closed above, like straight up ripped through. And obviously you're not going to be able to get that full read until those 15 minutes are up and that candle closes up there. But the reason that you can anticipate bullishness is boom, imbalance respected, the 50% mark just getting fully respected. You come down here to this 1 hour imbalance right there, boom. What do? We tap the higher end. We don't tap 50% mark, not the lower end. We tap the higher end, and we respect this bullish gap. So you drop down to a 1 minute, and boom, what does it look like? Straight manipulation. Boom, boom, reverse back up. And where do we go? We go to take out buy side. So obviously it's all hindsight when you don't have it mapped out, but or you don't think you know what you're doing. But boom, that manipulation move, simple standard deviation right there, right to the 2. And what do? We consolidate a little bit inside of there. So for the trade that I took, I was looking for a market maker sell model. I was looking for a sell model to sell us off, lower. And how I got to that trade was obviously, seeing buy side taken. We tap a 15-minute gap, and these wicks here. This was the most just craziest, eye-opening moment that I seen, finally trading this style of trading, like really trading ICT and actually, diving in, studying, focusing on it. So CE, consequent encroachment, this 1 hour wick. What happens when we close at 10 o'clock? We close beneath that. That's bearish. What do? We took buy side. That's bearish. After buy side liquidity is taken, and a gap gets tapped, that's bearish. That's 1, that's 2, that's 3 confluences. Drop down to the 15-minute time frame. We tap this gap, boom, we get a large retrace, to respect CE. So now you go back to this 1 hour and we grade that wick. Well, obviously if we grade that wick, that's A plus. We come back down and we respect, that's A plus. Now, this wick, what do? We close through. And then what do we do to this 4-hour candle? Or this 4-hour fair value gap? We close through on this candle at 10 o'clock. But at 10 o'clock, we also did that. So this was the run. This was the run that was meant. Obviously, all that work down here was meant for this. And now you come down to this 1 hour right here. You grade this, and you're like, okay, well, we're still bullish at this point in time. So now we have consequent encroachment of this 1 hour wick right here. Boom. Now you can get rid of that. You have it already marked. And you drop down to, a 15-minute time frame. Okay. A 5-minute, 3-minute, 2, and then a 1, obviously. So what actually happened here? Well, we obviously inverse this. Now that turns inverse. So if, we had a buy side up here, we had a top of this gap, buy side right there. We had a minor buy side that we just did not meet at the time. Where's that at? So we did not meet that, and then we had obviously an external above, deep. So that was not met anywhere near 9:30. So why aren't we drawing to this high at this time? Well, the 1 hour showed us that we wanted to stay beneath it at 10 o'clock. This close right there. Look where that closes, all the way down here. And what happened? We respected. So why aren't we going back up here? Well, buy side taken, 15-minute gap got tapped into. If you look on the 3-minute, we have a gap here, right here. So this fair value gap right there is supposed to send price back up to this high if we're bullish still. And obviously this inverse, we are not supposed to trade back down to this 50% mark right there. So if we trade back down off this candle like this, we want to see a body stay above this and obviously continue to move higher. But what happened during that? Well, we inverse this gap. On a 2-minute, what did we do? We did the same thing. We ran this 2-minute gap off of that same exact candle, and then a 1-minute. This is where this 1-minute gap is, all in this. So off of that, this is where that consequent encroachment wick right here gets truly graded, and where you actually, find its real use. So I dropped down to a 15-second. I was long. I went long, obviously, to go to these highs. I wanted to see that high get met, and obviously external. So this consequent encroachment, this wick got graded, and this one obviously turned out to be bullish. So boom, what happened when we touched it once? Boom. The buy side, bullish. Ran it again. Came down, failed to tap it. What happened? Kept going, bullish. Came back down, failed to tap it once more, and we failed to tap this 3-minute 50% mark. Failed to tap the CE. What happened? Kept running. That's bullish. So off of that, I'm like, okay, word. Well, we put in a change in the state, and then I'm long right there. Stop loss goes right underneath the body, and I want to see, continuation, accumulation, manipulation, distribution, obviously. Boom, tap back, one more, boom. So not going there is the was the biggest indicator for this trade, and that's obviously this change in the state down here. Like, I don't want to see a change in the state bearish if I'm trying to go long. Makes no sense. So we have the suspension block, 2 volume imbalances on each side, and boom, what do we get? Changing the state through it, disrespect the suspension block that really should have sent price higher, and then what do we get? A pull back inside of this block right to the 50, and after that there's no retrace. You'll never see a retrace back into this point if we're going to try and go lower. So now I wanted to see a full close, and we got it. Now on the 1 minute, excuse me, the 1 minute right here, this crazy long wick, I wanted to see this 50% mark get closed through, and that will give me confidence to take a trade bearish, and that bearish delivery is, in the market now, and that we are shifting market. So now coming back down here, look where we get that close at. So that 50% is right there, and I get in my trade. All right, so get back into it. That 1 minute wick, that 50% mark is right there. On a 15-second time frame, it's not going to look like that, but this is, being able to see this in time will give you the craziest advantage. So once we get that close below, and you'll see that here, obviously that full 1 minute close was on 10:07, and that gave me my confidence to go short right here. 29,882.50 is when I got filled. And where am I putting my stop loss? Right there, 50% mark of the suspension block. I don't want to see a return. I don't even want to see a return to this wick. And to be safe, I could have put my stop loss maybe about 10 points and been risking like $50 to make, X amount, however much I'm targeting. So obviously I put my stop loss 20 points about, and I was risking about, $130, something like that. And that's where I get filled. So now, what happened to this 1 hour consequent encroachment wick? Well, you grade it. Obviously, it sent price bullish at the time it was, but the agenda will change according to where time is, or where price is aligned with time. And we were in a macro. Price already shifted structure, changing the state. We ran a suspension, and now we are starting to respect bearish order flow. And as soon as you see that in the market, that is more than enough for you to understand that you have a better opportunity taking a short stab. We tapped at 15, we swept buy side, we changed order flow, ran a suspension block, put a change in the state. You don't need all these confluences, but when they're grouped together, it gives you the most confidence. Consequent encroachment of this 1 hour wick right here, grade that, and that's A+, and we are it just shows every sign of bearishness. So I obviously entered. I took my trade down to here. Here's sell side liquidity. It was a minor sell side in my opinion, because that's not really the draw that I wanted to see. I wanted to see new day opening gap, and I wanted to see also these relative equal lows get tapped, but that wasn't the draw for today. So I took this sell side level, and I took that sell side level, and I took the 50% mark, which is called event horizon. So I took this here to there, and I took the 50% mark, which is the event horizon that got met later. So wherever that is, event H. Boom. So now it all sounds like hindsight if there's no executions and there's no proof that I took this exact same trade that I'm explaining. But obviously I'll show you what I took and the executions I took. So You know, obviously, like I said, this 4 hour should have been inverse and this 50 should have held. You know, at the time, we should have not even traded. Doesn't mean like this 4 hour can't hold over the course of 4 hours. Obviously, that shit held. The body got left outside, and that's bullish, and we'll probably run to those highs. But at the time being, if you look on a 1 minute or 2, 3, 5, this 50 should have respected. This gap should have respected if we wanted to go higher. And you know, you have to anticipate that prior to us getting there, because now you get a better feel, and now you have a way to go risk free. Like I had $50 in the trade when we were like right there, and I wasn't worried about getting, you know, stopped out. I was actually break even, you know, down here. I wasn't worried about getting stopped because I had no more risk on the table. Would have left the day minus $11. So, you know, it's positioning yourself and actually, you know, taking these smart trades. So back to what I was saying with this consequent encroachment wick, it changed agenda. What happened? We tapped this gap right here, and then what do we do? Bodies got left out. Crazy. Body got left out down there after tapping this high. We touch it, the lower portion, one more time. What do we touch? CE of the 1 hour wick. We touch it once, touch it one more time. No bodies get left above. We don't tap through. We should respect that level, and after that, gone. Excuse me. We're out of there. So the agenda got changed. It was being used as a bullish, you know, a bullish area to respect and send price higher. But after we already took out these areas, there's no need. So you have to understand that's why there's no need at that point. So obviously I took my short right there. I just parked it there, 282. Stop loss there. And then I targeted event horizon down there. I had my first TP here, and I saw that that was a great area, but I did want to see the lower end of, you know, this get met, as well as there's gaps on here. Small gap right there. So I just took the 50% mark and, you know, trusted that that was what I wanted to see, and obviously positioned myself along the way. So that was the trade. You know, getting into the trade more. Wanted to just see that low obviously get breached like that, bam, and I wanted to see a long shot down there. You know, this 3 minute gap right here. Once this 3 minute gap right there turned inverse, what does a real inverse gap actually do? We touch the lower end, maybe even the 50, and what do we do? Straight shot down. So you could add another trade on the 3 minute, stop right there, beautiful risk, and you could have targeted simply right there. You know, anybody who took that trade, and even that down there, you know, even down there, you know, just make sure you're partial and along the way. But any trade you took would have been pretty much a banger by the day. So that's just another way to get inside that trade. And obviously, once we get through that, that's gonna be held as an inverse if price wants to get sent higher. So now we get a little bit more, you know, in detail. First presented fair value gap right here. First presented, what do we do? First presented right there, and then this is just the most important thing. When we got inside of first presented fair value gap, we had not taken sell side yet. Boom, we show strength to get there, put in relative equal lows. Boom, tap this 1 minute above, lower end, and we keep on going. When we finally get a close out, what do? We get a close out, and now we use first presented fair value gap as an inverse, and we touch it, continue to go lower to event horizon, and that would be pretty much it, you know. So that was just and then also you have to take in the last candle close, the last up candle close. You got to take that in consideration for an order block. Another entry along with first presented after we closed out, put a change order block right there, and then it turned inverse as well. Just look at that on a lower time frame, and just you can take your assumptions with that. That's all that happened on lower time frame. Bam, stop loss could have went right at the body, and you could have targeted event horizon, no drawdown, straight candles dropping in your flow, and it would have took you maybe a minute or 2 minutes to make however much risk you put on and whatever you were confident in. So just goes to show you, like, there's levels and there's scales to order flow and prices, as you can just see what it's doing, and how you can group it in your favor. And that's how I was able to, take this trade so low and continue to, hold this trade. So what happens to this order block? The agenda changes once the objective is taken. Agenda changes. Boom, we hold this bullish, and what do? Tap it once more. We tap the bottom of this gap. No bodies can get outside of it. And what do? We go all the way back up to buy side. So just goes to show you. Here are the executions that I took. So we had July 9th, 2026, 10:07, 44 a.m. Entry price 29,872.75. So 29,872. I don't know if I said 882 again. I'm not sure, but we're gonna just find it real quick, and then we're gonna wrap it up. So 29,872. So down there, I did it again. Yeah. So boom, down in there. Once that candle was able to close, and that I found confidence in this trade going where I wanted to go. So boom, perfect. 29,872 stop loss right at the 50% level. Did not want to see a return, and took it down to event horizon right there, 617.50. So about a 1 to 8, had about $130 on. Turn that risk to break even after that. Obviously, exit price 29,617.50. Not a top ticker, bottom tick, but a great entry and a great exit. That's all I can say. So that's pretty much the trade that I took today. Using ICT concepts, understanding, institutional order flow, and understanding how the market does really move. Yeah. So other than that, we're gonna wrap it up there. Hope everybody enjoys the video, and I'll talk to you next time.